Hello everybody, this will be the basics to open interest, price, and volume. This can be used to interpret footprint charts and is kind of the bread and butter to reading footprint charts and kind of getting started on where to read them. They are very complex, but this will just be the very beginning basics to it. You can look at this as like learning divergences when first learning how to trade. This is kind of like that, as price, volume, and open interest are kind of your bread and butter to looking at what price is doing and predicting, kind of getting a feel of where price is going. This will be a part one of a footprint series of Exocharts. This will be in a playlist of other Exochart videos. The first thing we're going to kind of go through now is what is open interest. Open interest is the participation of buyers and sellers as a whole. So typically, when you are looking at a buyer, you want to have a seller, so it's like an exchange between them. And generally, what this means is participation of buyers and sellers coming into the market. So it's more people getting involved in the trades, or it can be looked at as more liquidity or money coming into the market, entering the market. Next thing you want to look for too is a volume. So volume, again, is the number of volume transacted between buyers and sellers as a whole. It is different from open interest. So with this too is price. As you can see right here, this is price. It is a delta cluster, but think of it right now as price and as your normal candlestick pattern. And so there are 4 general rules that I want to go over in this video, just to get a start on reading footprint charts and just kind of interpreting what's really going on. So again, I have open interest opened up. In Exocharts, you can turn it on and off by going to OI up here. And then I do have volume on the bottom, these gray bars right here, you see. And you can turn that on and off by going to the VOL and the top of the Exocharts program. And then this is, of course, is price. Just think of it as a normal candlestick for right now. So really the first rule that I want to go over is when price is increasing, you generally want to see volume decreasing and then open interest decreasing too. So think of it as you want volume and open interest kind of going together. You want them doing the same thing, really. And then you want to look at price as what it's doing opposite in relation to open interest and volume. Again, open interest and volume are not the same thing, but when reading price data, you want the 2 things to be doing the same thing. And so just continuing off of that, you can see price was increasing as volume was coming down over time, and open interest was coming down over time. I wish I could draw a trend line to kind of help you guys, but again, just the first rule to go over is price increasing, and then you want to see volume decreasing and open interest decreasing, as this generally leads to a bearish reversal. As you can see, when I zoom again over here, you see price goes down eventually later on. So the second rule you want to be looking for is open interest decreasing along with volume decreasing over time, and then you want to have price decreasing with over time. This results in a bearish sign, and it can be looked at as a bearish kind of reversal. As you can see here, we had price coming down, volume was coming down, and open interest was coming down, and eventually we did drop down in a downward slope. Now the third thing you kind of want to look for, which is a bearish sign, is open interest increasing along with volume increasing, and then you want to see price kind of decreasing. This is a bearish sign. This isn't really the best example. Really, throughout this whole range, we haven't really been in a downtrend, but typically you do see this more and within a downtrend market or more of a trending market. Right now, we're kind of in a sideways market, so you really don't really see this third step as much, but it is a option to look for. Now, finally, the last step or the fourth thing to really look for as a general rule of thumb is finally a bullish sign. And a bullish sign is generally when price is increasing, volume is increasing, and open interest is increasing. As you can see, it all kind of happened here. We have volume increasing, open interest increasing, price increasing, and it kind of stayed the way as we did continue kind of coming up. That means people typically are opening up longs and closing their shorts, and more buyers are stepping into the market. Now, finally, to put things kind of all together, courtesy of Sudeep Saw on Twitter, he made this kind of chart that relates everything, price, volume, and open interest, what we kind of talked about. And so again, the first rule is when you have all three increasing, it is a strong bullish sign. When you have price increasing, but volume and open interest are decreasing, it's generally a weak sign and moderately bearish. When you have price decreasing and volume and open interest increasing, it's usually pretty bearish. And then when you have all three decreasing, it's usually a low strength in the market, but it can be kind of bullish, but in general it's a weak move happening. So really price can change in really any direction, but moderately bullish as price can increase a little bit. Again, these are the 4 general rules you want to have just kind of as a bread and butter for really interpreting footprint charts. Hopefully in the future videos I will be making footprint charts and just kind of going more in depth and kind of using all these 4 general rules in interpreting footprint charts. Again, if you guys like the video, please give a thumbs up, and I'll leave this playlist in a Exocharts playlist on my channel. Thanks. Bye.